Now onto the bond market moment. Todd Colvin of MarkIV Brokerage is here with the bond market's reaction to the government shutdown.
10-year yields hovering just below that 420 level. We've been talking about that for quite some time. Over the past couple of weeks, we've seen a range of 408 to 420 and haven't seen a real sustained trade north of 420 since going back to the early part of September. And it's been a choppy trade over the last couple of weeks as the market kind of comes to grips with this government shutdown. We obviously saw the first victim of that last week via the non-farm payroll number. This week would have been a quiet week, regardless of a government shutdown or not. The highlights being the FOMC minutes today. Likewise, we'll get the Fed chair making comments tomorrow. And then we have the refunding, the 3, 10, and 30-year, which had very good demand last month, and it will be a tough act to follow. However, with prices being cheaper, it will hopefully find demand somewhere out there. So keep an eye on those things. Obviously, that there's a lot more that could go on in the outskirts, but the refunding, the minutes, and the Fed chair, all on the highlights. And then obviously comments from the Fed chair. How will the Fed deal with this lack of data if it continues as we approach October FOMC?